Well, good evening, folks. Taking a look at the Emini S&P futures contract for June 2023. This is our daily chart here. And I want to cover some of the points I'll be looking for tomorrow in terms of key levels and areas of interest. All right, so here is the premium fair value gap, sell side imbalance, buy side inefficiency, or SIBI. And consequent encroachment, premium wick high, midpoint level there. The imbalance here, which is a SIBI, essentially is equilibrium between this high and that low. So we have that noted here, just in a light gray area. Discount, consequent encroachment of this wick, so midpoint of that, that's what's annotated. And the fair value gap over here, because we cut through candles, we're not supply and demand. This level is still going to be useful going forward, just as well as this one is as well. Dropping down into the hourly chart here, you can see the buy side liquidity pool, an interest in that tomorrow. We have a breaker here, we have a low, high, lower low, trading off of that old imbalance on the daily chart, the discount, fair value gap. Breaker, extended through. And then we have a small little fair value gap in the form of a buy side imbalance, sell side inefficiency. Trade down to consequent encroachment, and also the breaker there prior to rallying up, taking out short-term relative equal highs, which is buy side liquidity. Market trades back down in to the high of the fair value gap here, and basically just consolidates into the close for today. So these levels, I'll be having an interest in that going forward into tomorrow. On the 15-minute time frame, you can see we had a buy side liquidity pool here, as I mentioned. Relative equal highs. The market traded above that. And then once more here, we talked about that live on Twitter. I was looking at 40.34 buy side. And inside of that run from high, low, higher high, down close candle here, that's your bearish breaker. Extend that forward. You can see in the last hour, we'll take a closer look at that as well, but we'll roll it back into the morning session right after the 9:30 opening. Note this discount wick, consequent encroachment, beautiful delivery there. And again, the fair value gap that was on the hourly chart doesn't look so much like an imbalance on the 15-minute time frame, but we work top down. And we can see how we touched that bullish breaker here. Again, go back through the video, screenshot your charts from the video playback, and transpose that to your own charts. And then you'll be able to see what it is that I'm showing you here. It'll be much more meaningful should you do it on your charts, not just looking at mine, especially by watching tomorrow's live price action. Five-minute chart here. Opening price right here, midnight. That's this level here. So New York midnight opening price. We ran above buy side here, and I mentioned we would be looking for 40.34 buy side, and it rallied up into that here. All of this is a Judas swing. We're moving above the New York midnight opening candle, opening price. Rallies up, buy side. Then we're going to be looking for 40.18 sell side, which is right below this low here. All of this back and forth price action, finally giving up the ghost and trading back down into old order flow in the form of that discount wick, consequent encroachment. And we're going to dig into a little bit more detail. And again, you can see the breaker extended it throughout the day to the last hour trading, which was influential once more there. All right, getting down to the brass tacks, I have a 1-minute chart here. This imbalance here, extend that through again because we're not supply and demand. We cut through candles. That range, I projected forward and showed that on Twitter today as well. We talked about how 4034 buy side would be in contention, and volume imbalance. I shared this on Twitter as well. Right in here, we were looking for 4034 buy side, so really nice run up into that for a 5-handle run. Then stop dead in its tracks at the macro at 950, which is the high candle here, to 1010. So that's our first macro after the opening bell at 9:30. Algorithmic delivery takes it right into buy side. And then at that time, we took our attention to 4018 sell side. The market trades back down, works inside that old imbalance. We cut through candles, and there's another volume imbalance right here. Again, draw that out in time. Hits it as resistance now. Trade softer. Another imbalance. I mentioned this real time in Twitter as well. The bodies of the candles more or less respecting majority of that range. And then we had this one more little return back up into the original imbalance I mentioned here, inside of that bearish breaker. Okay, so again, all of this may be confusing. If you're just casually watching and you're not really trying to see where these levels are derived from and not transposing them on your own charts, I promise you're wasting your time. You have to do the work of taking the information and placing it on your charts and then cycling through top down meaning from daily chart to hourly chart to 15-minute time frame to 5-minute to now 1 minute. So the market sells off here, attacks the sell side there for another 5 handle. So we had 5-handle run there and a 5-handle run there. So that's 10 handles that I mentioned live on Twitter as it delivered. And then I said, okay, I'm done. I'm going to take my attention away from the charts. It trades back up into the imbalance here. So that would be an optimal trade entry. And also return back into a fair value gap. Market sells off, institutional order flow entry drill inside this area here. Doesn't fill in that gap, in other words. The market aggressively trades lower. We have this wick in here. Okay, so that's a discount wick before trading down to opening range gap low. And I mentioned this on Twitter as well. I showed you the chart, how to derive that information. And the market comes back up, hits that beautifully. That's algorithmic price delivery. Sells off once more and goes down into the opening range gap low. And then ultimately later on, trades down into that old discount wick consequent encouragement, which is right here. And the current new week opening gap high, new week opening gap consequent encouragement, and new week opening gap low shown here respectively. Here is the opening range gap shown to you at the 9:30 opening price. And with regular trading hours, you'll see that down here. If you have live data, you can toggle this. It'll be ETH, which is electronic trading hours, or regular trading hours, which is the RTH here. When you toggle that, it's going to show you where we closed the previous session right here. And then we wait for the 9:30 opening. There's your opening range gap. And you can see how we performed there. We had initial drop down. Drop was followed by the run up into the buy side I mentioned real time. We hit that right at the candle high at 950. That's the algorithmic macro that I teach, which is 10 minutes to 10, and it continues to 10 minutes after 10. Within that 10 minutes prior and 10 minutes after the 10 o'clock hour, there will be a price swing that originates and starts there, and it'll run for liquidity. We take buy side here, so where's it going to go next? Sell side. And I called that live all on Twitter, and it's all there. You're welcome to go back and look at all that. I didn't do too many tweets today, so it'll be easy to track it and see it. And the market trades, again, back up into that fair value gap I mentioned here. You can take the tweets also and copy the link from the Twitter. And then right mouse button on a trading view chart, on a 1 minute chart, it'll plot my tweet real time right on the minute candle. You can see what I was talking about at the time in proper context. It's a very useful way of following along the logic, even after the fact. Like if you have to go to school, run a business, or working, or sleeping, you can go back and do all these backtesting ideas here. Okay, so my version of backtesting is all of this annotation. It's not pushing a button with a market replay type thing, nothing like that. That's a forward walk test before you would do a live, you're trading with real time and also demo. So there's a step between that, and that's not what we're talking about here. This is back testing my version of it, which is studying the price action, looking at all of the scenarios and mapping out the idea with all this empty space here and here and over here. You'd be filling that in with your own chart, explaining what this return back to this consequent encroachment of that discount wick now acting as what? An inversion level resistance. Beautiful delivery. Now, this is why I tell the skeptics that watch this and they see a rectangle on my chart and they think right away it's supply and demand. It's not. For the folks that say it's support and resistance, it's not. This low, why did price not go just to that level right there and stop and turn on a dime? If it's support broken, turn resistance, why did it go up to the level I teach? Right there. Because the market's booked by algorithmic price delivery, not retail logic like support and resistance. Okay. The market then trades into the opening range gap low. Beautiful delivery there. And then consolidates going into the lunch hour. Speaking of lunch, here we have it. The market trades again off that consequent encroachment of that wick down into the opening range gap low. And for your notes, the opening range gap low, when the market opens higher than where we closed on the previous session, meaning where we settle and where we open at 9:30 the next day, that is your opening range gap. It may be a gap higher or it may be a gap lower. In this case, we gapped higher. So the opening range gap low is the previous day's settlement price or close. Okay, and then the difference is where we open at 9:30. The gap's higher when they open at 9:30 from the previous day's settlement price. Chances are we're probably going to look to see it trade back down into that range. It can go all the way down to the opening range gap low or beyond it if there's something else that it could reach for a discount. I've shown you this before. We have a low, lower low, higher low. This price run here, take your fib, drop it on the low, up to that high. It projects a swing high of negative 1.5, which comes to the price level of 4027 3/4. Extend that to the right. 4027 3/4 is the actual high tick of that candle, and that candle in the last hour of trading. Inside of that first fair value gap I mentioned. That's the rules, folks. That's how it's coded. And I know it doesn't sound fun when I keep repeating it, but at some point you're going to have to realize that these things are not random. Prior to that run up in here, we have a shift in market structure after 1 o'clock. Here's 1 o'clock. So now what are we going to do? We're going to run for the stops. Prior to what? During and prior to lunch. So we have all these buy side here, and all the way back up above here. So we're in consolidation right now in the daily chart. That's the reason why we're seeing these types of price action. Fair value gap, high to low, discount, trades down to it. Look at the bodies respecting it. Yes, we have a wick, and we have a wick there that just about closed it in, but the bodies are respecting the high end of that. That's beautiful. Price runs, takes out buy side, digs into the imbalance. Now, using this price run here to measure that projection, from here to here, taking out buy side here, that's suggested that that's a potential run. But if we go back to the old high back here earlier in the day at 4034 down to that low, it would be better for us to dig up into a premium because we're in consolidation. Buy side, buy side, buy side, and also with this swing high here and the old fair value gap. So there's a lot of confluence pointing to that 4027.75 level, which it delivers perfectly to the tick. 3 candles prior to it giving up the ghost. Also note that run up here is above the New York midnight opening price. Okay, so you have to know what time it is in New York local time. right at midnight, New York local time, that price, you want to have that annotated on your chart. Best short positions are going to be above it. Best long positions are going to be below it. That rule will serve you extremely well in the future. And finally, this is the last hour of trading for the New York session, or final hour New York PM session. Here's that 4027.75 level and the macro that starts at 250 to 310. That means there's going to be a move that begins there. It's up in a premium. It's going to seek what? Discount. Here's your price low in that run. Equilibrium would be right in here. So right below that low would be nice. Interestingly enough, it trades down into that and retraces back up into the bearish breaker. This breaker is the one I showed you at the beginning of the video, and we're extending it obviously across the entirety of the trading day. So we have this break lower, swing lows taken, trades back up into this candle right here. That candle's high is the exact high of that one and that one. That is institutional order flow entry drill. All it has to do is match that price. So you could be a seller at that candle and that candle, looking for a price run below that low here and that low over here. Relative equal lows here. That's where sell side resides. And again, we have the opening range gap low over here, which is previous settlement price on Friday. And then we have, again, repricing to that inside the last portion of the final hour of PM session trading. Let's go back into the details here. Trading back up in that bearish breaker with also institutional order flow entry drill after hitting the 4027.75 level perfectly. That's a nice short here. Volume imbalance, if you missed it, it trades back up into it there. Breaks lower. We have a wick. This is a discount wick that's going to act as an inversion level. So think of like support, broken term, resistance the real way. Then we have SIBI here, sell side imbalance, buy side inefficiency, which is a fair value gap, and I'm classifying it as what it is, a SIBI, S-I-B-I, sell side delivery. What's it inefficient on? Buy side. So we would expect price to deliver up to it. And look at that. Wouldn't you know it? It goes right to the tick price. Don't take my word for it. Measure that. Go in your time frame and measure the low of that candle to the open. Midpoint of that, 50%, draw that out in time. That's exactly where it goes. Inside of a bearish breaker. We have buy side here. We have a high, low, higher high. That last down close candle. Extend it forward. We have a SIBI and a consequent encroachment on that wick. Boom. Delivery. Perfect. Price breaks lower. Last up close candle prior to this displacement is a bearish order block. Trades up into that once, twice, gives up the ghost, and again, one more time, repricing back down into the opening range gap low for a final hour New York session trading opportunity. Just a beautiful PM session. This one here is like a centerfold. Also notice, again, we're trading above, right here, above that New York midnight opening price. Short at the breaker, short at the breaker, short at the volume imbalance, breaks lower, below this low here. So there's displacement. So now you can use what? You can use the 2022 model, which would be high to low, equilibrium. Here's your fair value gap. Trades up into it there. What's it going to aim for? Sell side, relative equal lows, and or the opening range gap low. And then boom. Just wonderful technicals. Just really, really nice to see algorithmic theory delivering as you see it here. Hopefully you found this insightful. Until I talk to you next time. Be safe.